What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do current events, and I do also provide daily updates on Hemi 137. And I do also have a blog down in the description below in which I essentially transfer all the knowledge from this video and other content on the blog. That way, you guys can have some sort of content to go with you throughout the week, which is quite helpful, I believe, in my opinion. But with all that being said, let's go ahead and get kicked off here. Now, one thing to keep in mind when I started talking about last week, I kind of said, once all essentially the earnings are pretty much done, in my opinion, as far as all essentially the industry leaders have reported. So the industry leaders are going to impact the market directly. And so, with that being said, this week was a prime example of the pulse of the market. And we want to know where the consumer is. And this is what the Fed also wants to know, but they want to know going into the Christmas season. So they really want to know essentially the results from the Q4 here, 2023, but that won't get reported until the beginning of the new year. So with that being said, what we're going to get here now is we're starting to see a lot of the telltale signs that it's going to get very, very nasty in the coming months. And if you thought it was bad now, because there's a utopic picture out there that everything is fine, the narrative is that everything is fine, that you're delusional and that there is nothing going on, which is something that narrative is always pressed out there whenever you are just on essentially the verge of a potential crash or major recession, which I believe we've been in a depression at this point. We're not in a recession. We've gone past 6 months at this potential point. This is potentially the biggest depression you have ever gone through and will ever gone through, at least in the current American history that we have. So just be mindful of that, and it will get a lot worse before it gets better. But we are talking about the stock market here, and we have to also understand that the stock market will recover very quickly, but we have to price in a recession, and we aren't quite there yet. We need that event to happen for the Fed to start cutting, then we price in a recession. And by the time they start cutting is when stuff is really bad. So just keep that in mind. So let's go over the weekly recap. Again, there was a lot going on this week, a lot of things we need to keep in mind. Obviously, we had some big earnings. We had Home Depot, we had Target, and we had Walmart this past week. Again, great pulses of the market and considering where we're going. The Walmart CEO came out and straight said, pause and rethink the health of the consumer. And that essentially tanked their stock quite a bit. They've actually done very well as far as expectations because their focus has primarily been on food and grocery, like essentially groceries, and that's what's helped Walmart even like through the pandemic. But it's been a shot to Target because Target really hadn't focused on that. They were focusing more on clothing and other items like that. And they've also Target went to the upside despite all their missed expectations and their continued theft that are going on there. But when looking at HD, we have to understand that HD. Oh, and to touch back on Target too, you have to understand in 2 decades, Target hasn't had 2 negative revenue quarters back to back. They've done extremely well, and they have had 2 this far, looking at a third quarter of negative revenue, potentially even a fourth going into Q4. So we're going to have to see our fourth going into Q1 here of next year. So we're going to have to see how that does play out. And then we also have HD, which is Home Depot. Home Depot, again, continuing. Again, they're wordsmithing a lot of different things here to try to make things look better than they actually are. But Home Depot is but on a very, very steady decline. Last quarter, they were down like 3 to 4% on revenues. This quarter, another 4 to 5%. So they are continuing to dive, yet the market is pushing up. And see, this is what is very deceiving about a lot of different things and why I talk about market manipulation, because of the fact that they have expectations that are extremely low, and they silo that particular essentially earnings into the current market structure. And so when it does beat expectations, if you could put those expectations so low that you just have to pretty much show up and you get a participation award, and then you're essentially your stock rockets up, is pretty much where we've been over the past couple of months. And I do believe, going into the back half here in this Q4 earnings that we're currently in, and then in Q1 earnings, I think are going to be potentially the worst of it, the bottom of it, as we start pricing in a recession, I believe around February or March. At this point, I think they're going to drag it out until that point. Again, we have to understand the current baseline and what we're in. We got the holiday season coming up. Obviously, we have Thanksgiving, and then we get Christmas right after that. So it's a very slow, normally the normal volume around this time is very low anyway. So you have to keep that in mind. Normally the first week of December, second week, a little bit, you might have some action, but ultimately December is pretty much a shot. And then right after December, right after Christmas, then you start going into holiday, and then you start going into essentially that big run up, essentially the Christmas rally for the earnings, because everybody's expecting big earnings statements. And then obviously from that point, once that is diluted and once we get through all those major earnings, then stuff kind of dies out and takes a big dive normally. And then on top of all that, you have Bitcoin halving in April, and then you also have essentially the Bitcoin spot ETF that is trying to get approved before that point as well. So, and you have a lot of discussion around Binance. So there's a lot going on there. So let's get back into the weekly recap here. So we did also have the core CPI, which is very, very deceiving. They expected 3.3 and it came in at 3.2. This is all, they're blaming the huge drop from a 3.7 on, I think it was like 34% healthcare drop. As your insurance dropped, I highly doubt your insurance has dropped that far. And when you look at the statistics on inflation, the things that matter are still increasing in inflation. And this is something I talked about a while back on the past couple inflation reports. And you have to also understand that, people were talking about skipping meals and just not affording, and delinquency rates on automobiles, on homes are upticking. Credit cards are increasing even more. Essentially all-time highs on credit card debt, personal credit card debt, are continuing to run. So how are you telling me inflation is coming down? It's definitely not willfully at this point. And so you can't be deceived by the numbers. You have to understand that the person's getting so tied up working 2 full-time jobs, even despite the fact that a lot of full-time jobs are going away, and a lot of it's gig work or part-time work, which people are working multiple jobs. And both people, if you have a family, to keep essentially making ends meet. And ends meet is so expensive, as you can see here. These are just some of them here. You have 19.2 on car insurance inflation, 9.6 on car repair inflation, and you got transportation at 9.2. Rent is still at 7.2, despite it being cut in half compared to that in mortgage. Essentially holding a mortgage loan, and home ownership is still sitting at 6.8. And of all things, orange juice over the past 2 years is up 249%. It's just absurd. That number there is just absolutely absurd. I don't really drink that much orange juice. It's rare that I do, but holy moly, 249%. We did avoid a government shutdown, so congratulations on that. Not like it would have really directly impacted the market. It would have, in a sense that we wouldn't have gotten our reports if that was the case. The only persons that would have actually been affected by that would essentially been the government contractors, as they don't get paid, but all government employees will get back paid. They just have to hold off until whenever the government shutdown is. So that has been, again, avoided and pushed back until January. This is why Moody has been downgrading U.S. credit, because of these games that they're playing, that they're waiting until last minute to do anything. And when they do, they only kick the can 2 more months down to revisit this thing all over again. And see, these are the problems that we're having. And then we have Sam Altman, the founder of OpenAI and ChatGPT, unexpectedly leaves the company. This is big news that dropped like Friday afternoon, I believe. And there's a lot of speculation on what's going on with AI. And I know Elon had made some suggestions that ultimately OpenAI was supposed to be to help humanity, but now it is not at this point. And so there's, again, a lot of worries and concerns about what's swirling on there. And if you know anything about Elon's approach about what's going on with AI, and just in general for our security, and understand where, if we don't regulate what's going on with AI, it could lead to some major issues. And ultimately understand, with all the deep fake stuff, essentially all the videos that you see where it's voiced over and it's actually not real video and it looks just like the person, it's very hard to determine if the video is actually legitimate. There is a lot of that stuff, and it's being created by AI. So they can essentially change the narrative without you knowing, if you aren't paying attention to these things. And considering that we're so plugged into, what is going on, if you don't actually sit and critical think about a lot of these things, a lot of these things you won't even think about, and you have to understand, this gets into human psychology and all that. And it's also a good thing to learn about when you talk about the market, because it is a lot about human psychology and emotion. And the market is very emotional. I've made that comment throughout the years, because the market does get very emotional on things, and you have to let the essentially market digest and get through the emotions, because it can go pretty crazy at some time. So nonetheless, there's a lot of worries and concerns about that regulation. So it's interesting to see what happens there, especially because this week, guess what? We have NVIDIA earnings this week coming up. So, and then another big news article that came out on Friday. Look at that. Let's just drop some major news on Friday. That Citigroup, yes, Citigroup plans to announce major layoffs on Monday. I do believe it's all associated with a particular department that they are completely getting rid of. And so, with that being said, there are major layoffs going to be dropped during Thanksgiving week. And see, these are all major things. These are all primarily not just due to high interest rates, but you have to understand where this all came from, right? This is all coming from the 40% of the printing of the money supply. So the Fed are well aware of what is going to occur after all these things. People just get caught in the moment, and it's essentially on everything, right? You only care about your monthly payment, your monthly car payment. You don't care about the excess 14% that you pay on the back end of that, right? That's a little extravagant there, but right now mortgage rates are essentially sitting around that 8%. So things are still not in a very good position that we're in. And then again, they're lying about inflation, they're lying about non-farms, all these different things, right, are important. And trying to pull essentially the wool over your eyes on what's actually occurring, and trying to control the narrative that things are okay. So again, we are getting into more and more information that is pointing that you are in a depression. You're not in a recession. This is a depression. You can define it however you want, but things are bad. And GDP has been manipulated because a huge percentage of that is government jobs. And there was a large number of government jobs that has helped boost up the GDP. And so, considering all the money we're putting out to other countries and support, all these things matter and play into the GDP. And so, again, we will wait and we will see, and we'll continue to watch. Again, not saying you can't take advantage of the current market sentiments. I've been playing both ways. You have to learn how to play both ways, especially in this market, because you don't know what's going to happen. And then ultimately, when these does eventually play out, which it will, because these cycles don't end well, then when it resets, then we will take advantage of that too. So this upcoming week, obviously, we have Thanksgiving. So happy Thanksgiving to everybody out there who celebrates that. The market will be closed on Thursday, and then there's early close on Friday. So the volume will be very low on Friday. The market closes at 1 p.m. Eastern Standard Time on Friday. So do keep that in mind. The volume on Wednesday will start dying out pretty early after that first hour. Volume on Wednesday, we've already kind of seen that throughout the past year, two years. Volume just kind of dies out after that first couple hours. Hasn't really been a lot of continuation. It's been very rare that does happen, given this current market sentiment. So then we have upcoming major scheduled event pivots. Obviously, monetary policy is until December 13th, and we got core on the 12th. Those are going to be the last two major scheduled planned events for this year. And then we will get into the new year. Upcoming earnings, again, it could be a big Some good pulse of the markets with Lowe's and John Deere, but ultimately what we're watching is Tuesday after close. We got Nvidia. Again, Nvidia, they're pumping that stock. They were actually, a lot of the forward guidance going back to what we learned this past week. A lot of the forward guidance is that they are concerned about the consumer. The consumer started dropping off. Home Depot even talked about this. They're concerned that there's going to be some major drop off here that they started seeing actually towards the tail end of October. So people are already starting to see that before we started talking about this new quarter of earnings. So we'll get to see what happens going forward. Now we look at this expected moves for the week. Obviously, SPX has come way down. This again, it's very not a lot going on during this week. Obviously, volume. Everybody's on holidays and stuff, so not expecting a lot on the index. So if the index for some reason if we get some crazy news that comes out, it could be a good week to play options early in the week, like Monday and Tuesday morning primarily. And then aside from that, they might be pretty dead from that point. So Tesla's still sitting at 12 from last week. BA dropped a lot, as you can see, from 7 to 5. And then JPM just really isn't doing much this week. Might be affected, though, with all the Citigroup news. There could be some more news added to that. Again, they are not trying to drop this news until Monday. So there could be some really interesting outcomes from that on Monday. So we definitely have to watch and understand. Again, the banks do hold a lot of weight in the market. So if something does happen, the banks, it starts selling off quickly, especially if you get another big name bank that fails, which we saw Citizens Bank fail just 2 weekends ago now. It's not the big Citizens Bank, but it is still a big bank, and it failed. So with that being said, we will continue to watch as this thing plays out. So let's get into some technicals now. What do we have here? So as of right now, technical wise, we've still been grinding up, and something I've stated is we would retest the 4,600. Especially after that news, Powell essentially kind of just essentially enforced the fact that we're paused. Like interest rates are going to go any higher than this. And I can see that, but it really depends on how long the Fed are going to hold rates. The Fed starts, and they've talked about potentially even increasing rates. And again, the next core, if it continues to pump back up, there's no, again, in my focus, or what I'm looking at, there is no way health insurance has dropped 34%. That is a huge drop. You're telling me your health insurance dropped 34%. Again, they're manipulating numbers so bad that they're trying to, again, paint this utopic picture going into the new year. Because I guarantee you, coming into the new year, we're going to have that Christmas rally going into it. Into the earnings, and then it's absolutely going to get crushed. And I believe we're going to get some jaw-dropping, essentially, numbers that come out. We do also have another non-farm here coming in the beginning, the first week of December, so we want to watch that, because that's going to be the number that is going to provide that shock. And is going to be December, or are they going to pencil whip it until January? And then also realize we do have revisions coming up from this last big drop that we had, compared to expectations. So again, technical wise, we are just grinding up, and it's not looking great. I think we could maybe retest the 4,600 and drop. I don't think there's going to be big enough news to push us up. It's not saying it won't. If we do start pushing up to all-time highs, which you still have to take into consideration that next year is election year, that they will do whatever it takes to push this market back up to new all-time highs. They don't want to be known as an administration that didn't have all-time highs, right? And so they don't want to be known for that. So they are literally doing whatever it takes to keep this market propped up. And this kind of move here, just by looking at this chart, this is not normal. This pure parabolic push-up is not normal. Right? Tons of countries, China, Japan, are selling our debt, our bonds. Nobody wants to mess with us. And the fact that we are essentially being threatened with a AA credit score, which, again, you're well aware of the credit score. If you've been trying to purchase a auto loan, or you're trying to get any kind of loan, home loan, mortgage loan, what that credit score and how it affects you. It makes your payments even more expensive. And right now, our interest rate is astronomical compared to what we actually owe. That's so much more than our actually defense budget, which that was another piece of news that came out that I guess they got audited and they can't claim for another $6 trillion. It's 6 years in a row. They cannot, essentially, the Pentagon here cannot, essentially, they don't have any record of $6 trillion that are just off the books. So you explain that one to me. But anyway, so we're looking to see what's happening here. This is definitely not a normal move here, this parabolic move like here. Like, how do we just when we're breaking support and we're just pushing up like it wasn't even support or resistance. And so this is why technicals are hard, because there is so much manipulation and it's obvious on a lot of fronts, and this thing is just continuing to rip. So 4,600 is definitely a level you want to be watching. If we break that, I do believe we will be looking at potentially an all-time high if we can break 4,600. But we have been chopping real hardcore around here, and we got some big news dropping on Monday about banks. So it'll be interesting to watch. And then again, if we break that back down, then we're still looking at these levels again. We're looking at 43.66 is a support level. Again, roughly around here, the 42.30, and then again that 4100. Again, I've stated if we break the 4100, we're in trouble. And so we came down and retested it and then started pushing back up. Maybe we just continue to grind going into earnings. Maybe this was our Christmas rally. It very well could be. But we're definitely going to have to see moving forward. So let's take a look at Bitcoin here. Bitcoin continuing to roughly chop around that 38, 36. I've stated this multiple times. Bitcoin could hit 40K and can come all the way back down to 10K. Again, there is news. You have to be well aware. There is news on crypto that could absolutely gut punch crypto and cut this thing in half. And it has to do with Binance, Tether, all these other different things. A lot of stable coins are worrisome. If news drops on these things, but there's been a lot of rumors floating around there. If news drops on this thing, this can absolutely obliterate Bitcoin at this point and then reset it. You have to understand that it is very much a possibility. This is why I talk about risk management. I'm not saying don't take advantage of these pumps. Take advantage of the pumps. But again, not financial advice. You have to understand that at this point, it could be chopped in half. There is news on the floor. It's just like the stock market in general and equities, right? Like, you have to understand that there's a lot of negative news all of a sudden on a lot of these different companies, especially Tesla has been dealing with all kinds of junk again. They've been selling off real heavy. We're looking for another hard reset. Once that plays out, then yes, this whole what's the next thing going to be? Yes, it's always out there and blah, blah, blah. But ultimately, we need this recession. We need a hard reset. We need things to normalize because things are just too bad right now. And then once that too bad actually plays out, then we can reset, right? And again, the Fed aren't going to cut rates until houses get reset to normal prices. And the only way we're going to do that is to be able to lay off more people. And the easiest way for them to do that is just keep rates where they're at. And hopefully inflation doesn't start coming back, because if inflation does start to rise, they're going to have to increase more. And then again, at that point, it's going to put more pressure on everything else. We are starting to see those signs of deflation, and deflation can be, again, worse than inflation. You can kill demand so bad that people just can't recover from that. Right. And putting everybody out in the street, and people just can't recover from that. And that's the problem about deflation, is that you're essentially taking all the money out of the system. You're essentially siphoning all the money out of savings. You're siphoning out of all essentially the assets that people have acquired. And then their biggest one being their home. And now they have no place to live. They have nothing. There's no work out there. That's the problem that happens with deflation. And then how can you essentially stimulate that economy, right? And we have to understand that interest rates aren't to that point to where all of them have caught up to this point. And that's why I think we could potentially get that smack in the face here coming in February and March. And that would be at the point. So we could potentially play a rally. I'm not saying play a rally, but you still have to be very cautious that news may drop. And this is something I've been highlighting too, that any kind of news can drop that can drop the market overnight. That's those are the kind of events that we're playing with, these black swans and these gray swans, and the amount of um, weight that they hold on the market that could drive a lot of fear. And this is why you're seeing the way schedules are scheduled the way they are. You're seeing why reports are the way they are. They're trying to dilute the message out there in small increments, so people are conditioned to believe that the narrative is it's bad, but we're still handling, everything's going to be okay, we're going to have a soft landing. They're not going to straight out tell you that you're in a depression. They're not going to straight out tell you that things are bad. They're going to tell you after the fact, when everything is recovered, maybe a year, 2 years after everything is recovered. They're not going to tell you when you're living in the moment. This is just the way it is. It's always been that way. It's just, again, human psychology. You can't tell someone, because then they're going to just panic, and then you have absolutely no control over the situation. You can't do that. You have to let this thing play out the way it is. So again, we'll see what happens with Bitcoin. But like I said, it even hit up to 40 here, which has been attempting to hit 40. And then it could reset. And you could just be aware that the SEC has those cards in its pocket to drop it at any point. And then you have Tesla, again, some bad news. It has been riding up. We'll see if it will hold this. It looks like it's a normal pullback. We'll see if it can hold roughly this 227 mark. If it can, could be potentially looking for that 300 push again going in earnings. Otherwise, I could see another revisit of the 200. Again, if it breaks 200, I think we're going to see lows just like the markets. So these pumps are very much, it's got a lot of bad news going on with Elon. He made some comments. I don't know what exactly his comments were, but people said it was very racist for whatever he said to sell off, but then it popped right back up. So definitely gonna have to see what goes on here. But again, if we're going to start tying in a Christmas rally, this thing could potentially hit 300. Otherwise, if it can't hold here, we've gotten out of that earnings cycle, right? This is the earnings cycle pullback. We've had about 4 weeks about now. And the market just started pushing back up. And that's this normal cycle. That's what happens. And so this is why you need to know what the normal cycles are, and then go from there. So we'll continue to watch this, see if it does pull back anymore. But like I said, if it does pull back anymore, we could be looking for earnings cycle. Again, I think that bigger move won't occur unless, again, any news can drop at any point. This is just the way the market is. You don't know what's going to happen. There could be news that just drops and just introduces massive fear into the market, which forces the Fed's hand to start cutting. That's a possibility. You have to understand that there is a possibility of that. Not a great possibility. I think it's going to take longer. I think February we'll start rolling out more recessionary type numbers to where things are so bad that the Fed will have to start cutting roughly, I think, around spring, which I think is kind of where they're gauging it to be. So we're gonna have to see, but we'll see what happens moving forward. So we're watching that level again. That 246 is a hard ceiling right now, and again the floor is roughly around that 225. It needs a break. So watching that. Palantir, it looks like it's starting to break out over the 20. We'll see if this thing can continue up. But aside from that, especially with the AI news, that's why I brought up the AI news, because if there's a lot of negative news about AI, this thing could just start selling because of that. I know Microsoft started selling off a little bit come Friday because of that. We'll see if that continues to play out. Again, NVIDIA will feed the narrative on whatever that is. If NVIDIA does really well in their forward guidance, again, they are holding a lot of weight. Again, they're the ones that pushed up the market at the beginning of the year. So there'll be a lot of eyes on what's going on with NVIDIA moving forward in the infrastructure of AI and where it could be potentially going. So that's another black swan that we haven't even seen. Again, there's some negative news about AI that could strike your big seven down, and then we're going to have to deal with whatever the consequences are of that, right? So those are the things we have to watch. So definitely watching this key level around the 19 mark, see if we can push up. Could potentially run up to the 28. There isn't really much else other resistance going up to that 28 mark. Again, there'll be some speed bumps, but ultimately that's kind of the next zone I'm kind of watching there. Otherwise, this thing could start rocking back down and selling off. All just watching. Apple again hitting that top range again. It got rejected initially pretty hard here, but I don't see it breaking 200. Again, very parabolic. You can't tell me this isn't heavily manipulated despite everything. We'll see if this thing does pull back to the 171. So watching those two levels there going forward. Then we have BA. BA has started to push back up into that range. It sold off pretty heavy, but now it's starting to get back in this choppy range between the 220 and the 191. So we're really watching to see this. Again, this is going to matter because I do believe big tech might be in some trouble going forward if there's inflation problems or worries and concerns there. And then ultimately, again, understand that value will start holding up. Value and banks, as long as the banks can hold up, the bank starts giving out. That's a whole other situation as well too. So value looks like it's starting to come back and become a little bit more stable. We'll see if that's the case. Again, over this past week, value is not. It's been a lot of very heavily manipulated, a lot of wordsmithing. The numbers aren't good at all, but there's a lot of wordsmithing going on about what's going on and where the consumer's at, and yet we're still sitting like nothing is wrong with the market. So again, I think that could correct it very quickly. So you got to be careful. JPM again sold off heavily and just broke right back in everything. Heavy manipulation. Looking back for that 160 mark, and then also looking for the floor here at the 141. Goldman Sachs, same thing. It broke back down and then back in the same range. And same with BA. It's playing this tight range between the $30 mark and roughly that $27 mark. So we wait and we watch and we see. That's currently where we're at. Again, I don't really expect a lot. Nvidia, again, I think is the biggest watch this week in any kind of banking news. I think with Citibank is going to be the biggest things this week. See if there's any kind of cascading effect from the Citibank stuff. And again, watch Nvidia and AI are going to be the two biggest things to watch this week. And then we'll take it from there. And then after that, we'll get a little bit of information, and then we're kind of just start prepping for the new year as we come to the tail end of 2023. So have a good one out there. Again, manage risk, have a plan, and I'll see you guys on the next one.